I am Eric with Mother.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. Let's take a look at markets here as we see the Nasdaq trading for the second day above 15,000 for the first time ever. And in this video, I'm going to be discussing a similar market that has similar looking charts to those of US markets. It is the Canadian markets. We can see also Canadian market essentially trading at all-time highs on the daily. As we can see here, all-time intraday highs. In this video, I want to discuss the fact that the RSI on many of these markets on the daily is showing struggle when trying to move above 61.8. In other words, if this topside resistance line continues to be resistance and we see the market coming off this level of the RSI, in other words, confirming resistance, in other words, confirming that you made new highs, but your RSI did not move above 61.8, this is the strongest type of negative divergence. In other words, this could be a recipe for a pullback situation, unless, of course, the market can clear this negative divergence line. Keep in mind, not to expect a big sell-off in the market until we break RSI lows. So this RSI lows line would have to be broken before the market can entertain a deep sell-off, or maybe the situation where it goes into a bear market. This line would have to break on the daily. Now we can see that also on the 4-hourly, we have a similar looking negative divergence. And again, intraday highs, all-time highs, but your RSI is struggling to hold RSI 61.8. As you can see, not even in the 60s, which means that if this topside resistance line continues to be in effect and the market is unable to clear this topside resistance line, and of course the key takeaway here is the RSI 61.8 negative divergence, this sets the stage for a pullback. And again, understanding that pullbacks can take place, there won't be major pullbacks until we break recent RSI lows on the 4-hourly. Going back to the daily, another way to simplify this, even with a pullback, it's only when the market finally breaks below the upward sloping 50-day moving average. So it's only when we break below the 50-day moving average and have an aggressive break is when we can entertain lower prices, because the market's been using the 50-day moving average for reversal area. So also that's another way of gauging the market, similar to the line, which is the RSI lows line, needing to break before this market can go down. This video essentially was discussing RSI 61.8 negative divergence. In my opinion, in my research, this is the strongest type of negative divergence. And again, it remains true to the fact that this is resistance area, or we can anticipate resistance area, unless the market can clear this area. There's a pullback here. Could be shallow, could be a deep correction. Who knows? It depends on what happens at the 50-day moving average, and also what happens with the RSI lows line, either becoming support down the road or if it is broken. And so it is. I am Eric with Mother.com. It is a great joy to leave you in the love and in the light of the one infinite creator. Go forth, therefore, rejoicing in the power and in the peace of the one creator. Namaste.